All right, dear students, we are going to do the practice of substantive procedures. And this is the first question of substantive procedure in your Kaplan kit after the internal control system. And the number of the question is 177. And the name of the question is dashing. So first of all, let's go to the requirement. And this is a full 20-mark question. Describe the steps the auditor should perform in undertaking a positive receivable circularization for dashing company. Now, the first thing is that you need to know what is receivable circularization. Now, when you are auditing a company, for example, ABC company is your client. Now, this ABC company will be having a receivable which is recorded as the current asset in their statement of financial position. Now, when the entity is selling on the credit, receivable is actually a major amount of the statement of financial position. So it constitutes a material amount of the statement of the financial position. And when you are auditing, you are supposed to gather evidence on the receivables. So ABC company is your client. They have a receivable balance that is recorded in their current asset. And this receivable balance needs to be confirmed. Now, how many things you need to see regarding this receivables? First of all, you need to see the value, whether this receivable balance have been recorded on the correct value. When we were doing the risk assessment, at that time we had risk in our minds that there's a risk that there are some bad debts which are still present in the receivables and may not be removed. And if those receivables have not been removed, the receivables might be overstated. In addition to the bad debts, you also consider the doubtful debts. There may be some receivables which are not going to pay. As a result, allowance for receivables should be recorded. And we know from our basic accounting paper that closing allowance is deducted from the receivable balance in the statement of financial position. So the first thing you need to know is the value. Maybe there are some bad debts, maybe there are some slow moving receivables, maybe there are some doubtful debts which needs to be recorded. The second thing that you need to confirm is the receivable balance, and receivable balance is actually the balance which the company needs to recover from their receivables. That means this receivable balance is owned by the company. Now, what do we mean by owned by the company? For example, if I have recorded the receivable, that should be my own receivables, which I am supposed to recover. Contractually, I have a right to recover cash from them. Okay, that's fine. And the third thing you need to know that when we record the receivable, there are so many things where we record the receivables. Like we record the receivables in the control accounts. We also record the receivables in the individual ledgers. Control accounts mean general ledgers, and they are individual ledgers, subsidiary ledgers. So we need to ensure that the receivable balance have been correctly recorded everywhere where it should have been recorded. So there are three main assertions you can say which is related to the receivable balance. The first one is the valuation, that receivable should be recorded at the correct value. The second one is the completeness. It has been recorded everywhere where it should have been recorded. And the rights and obligation mean that the company owned the receivables. So these are the things you need to remember. Now, coming back to the receivable circularization. When the entity have a receivable balance in their statement of financial position, that receivable balance needs to be confirmed. Now, circularization means that you will be writing to the receivables with the permission of the management. You'll be writing a letter to them on the letterhead of the company that this company has recorded you as a receivable and according to this company, you owe this much amount to this company. Now, receivable circularization means that there are two ways to confirm. You will be writing a letter and then you are expecting a response from them, that they will be confirming you, yes, we owe this amount to this company, and they are replying you, positive circularization. And sometimes we do not expect them to reply, and we say only reply when there is a difference. Like, for example, they owe 100,000 according to this company, and you write them a letter and say, reply only if you disagree. For example, they reply you, they say, no, we owe 90,000, not 1 lakh, not 100,000. So this is the process which is known as receivable circularization. Now, what the examiner has asked you, describe the steps the auditor should perform in order to undertake a positive receivable circularization. That means they're asking you regarding the process of receivable circularization. Now, something which is based on a common sense. Now, obviously, these are the receivables of the management, not your receivables, that you should be blunt enough to contact them directly. No, you cannot do this. First of all, you have to take the permission from the management to perform the receivable circularization. This is the first step. Because these are not your receivables, these are the receivables of the company. So first of all, you need to take the permission. Once they have granted you the permission, now let's write these things over here. Receivable circularization. All right, now what are the steps? I'm not writing in detail, I'm just making some points first of all. So the first step is that you need to take the permission. This permission is also called consent. You need to take the permission from the management to perform the receivable circularization. The second step. Once they have given you the permission, now you need the details of those receivables. Details of receivable. That means you need the list of those receivables to whom you are going to write. All right? And there may be many receivables, and we have to audit on the sample basis. So the third step is you will be selecting a sample to whom you will be sending the circularization, selecting a sample. Once you have selected the sample, then the next step is that you will be preparing the letters. And there should be initials of the management, signatures of the management on those letters. And then these letters will be posted, or these letters will be sent. Then, if you have received the reply, that's fine. Just review the replies. The next step is that you will be giving the reminders to the people who have not replied you, for example, by emailing them, by giving them a call. Nowadays, there are so many sources you can contact them. And then when you have reviewed the replies, if there are any differences, those differences should be reconciled and discussed with management, should be discussed with management and reconciled. For example, there's a difference in what they say they owe to the company and what the company say they have to receive from them. So if there's a difference, you need to ask them, you need to discuss this thing with management, that why there is a difference between what they are saying and what you have been telling us regarding the receivables. All right, now you can write the same thing in the form of sentences. Okay, the first one, that is going to be quite simple. Obtain the permission from the management, such as finance director, to perform the receivable circularization. Okay, this is the first thing we have written. Now the second step was to obtain the details. Obtain the details or the list of the receivable balances at the year end. This is the second step. Obtain the details or list of the receivable balances at the year end. And we know from our accounting concept, this is something you should remember, that these are the individual balances. These are the individual balances. These are the individual balances, also known as the subsidiary ledgers, the details. And the part of the double entry bookkeeping is the control accounts. And we remember from our basic accounting concept that the total of these receivables should be equal to the total of the control account. So how we can confirm this? Cost means you're going to total it, cast this list. That means you're going to total the balances and agree the figure to the receivable ledger control account. Because we know that the total of the individual balances should be equal to the control account. That means if this is the same, accounting has been performed correctly. And if this is not the same, then there is actually a difference in the recording. Either there's a problem in the individual accounts or there's a problem in the control account. Because we know from our earlier accounting concept that we prepare a day book. And from the day book, the individual balances are posted in the individual ledgers and total goes to the control accounts. So if there is an error in the day book, that means that will constitute an error in the individual balances as well as in the control account. But if there is a costing error of the day book, then the difference is going to be only in the control accounts. So when you are performing the audit, you should know all of the accounting. Like if you are weak in the accounting, you cannot be a good auditor. So you should know how the things work in accounting, and then you will be able to perform the audit. So similarly, you will be writing all these things in the form of sentences. Now, the fourth step was to select the sample. Select the sample of receivables to whom receivable circularization will be sent, or those receivables which are going to be part of the receivable circularization, because there can be many receivables. So you need to select on sample basis. Now the sample should be based on a particular criteria, should not be the biased one. Like you will be using the sampling techniques to pick up the receivables with whom you are going to perform the receivable circularization. So similarly, you will be writing all these things, all these points in the form of the sentences, because in the exam you are not going to make such points. This is uh, for your, just brainstorming that what you are going to write in the exam. But in the exam you have to write full sentences like this. So again, going back to the question, describe the steps the auditor should perform in taking a positive receivable acquisition. So this is for 4 marks. And we know usually we have to write one procedure for 1 mark. Now, describe substantive procedures other than the receivable acquisition, because we have already written that. The auditor should perform to verify each of the following assertions. Now, we have already made the discussion on the assertion, that what are assertions. Accuracy, valuation, and allocation. So you need to perform procedures which ensures that receivables are corrected on a correct value. Then we need to write procedures which ensures completeness, that everywhere the receivable balance have been correctly recorded. And then the third one is related to the rights and obligations. That means whatever receivable the entity has recorded, they actually own those receivables. They own those receivables. So this is how we are going to write the procedure. Now, first of all, we'll be writing the procedures related to the valuations. Now, the first assertion according to which we are going to make the procedure is valuation. Now again, you need to write the procedures which ensures that receivable have been recorded at the correct value. Now there are many ways to confirm that thing. I have already told you. There's a balance recorded in the statement of financial position, right? This is the balance which is recorded in the current assets. This is the balance. Now, the possibilities are that there may be some bad debts which are still part of these receivables. There may be some doubtful debts regarding which receivable allowance may not be created. There may be some slow-moving receivables regarding whom the allowance should be recorded. There may be some disputed receivables. And again, there may be some recoveries from some receivables as well. There may be some recoveries from the receivables as well. So there's a balance recorded in the statement of financial position and in the current asset, which is the receivable balance. And we need to make sure that we are actually making the procedures which gives us the evidence that the receivables has been recorded at the correct amounts. Valuation means they are recorded at the correct amounts. Now, there's a possibility of the bad debts. There may be some bad debts, but still they are recorded in the receivable balance. They have not been removed. Doubtful balances, slow moving, against which there should be a receivable allowance, but there may not be any allowance recorded. There may be some disputed receivables. There may be some recoveries after the year end, and we need to make sure that what the balance has been recorded in the statement of financial position is actually the same what they have recovered from them. So we need to check all of these things. So how we can check, discuss with finance director. You can also write inquire. Discuss or inquire from the finance director. Whether there are any bad debts and whether they have been removed from the receivable balance. So the first thing is that you need to ask them, inquire from the finance director whether there are any bad debts. If they say yes, there were some bad debts during the year. And then you're going to ask them whether they have been removed, and they're going to say yes. Then also you can check whether those bad debts have been removed. All right, for doubtful and slow moving receivables, review whether the allowance for receivables have been recorded. That is, closing allowance should be deducted from receivable balance in the statement of financial position, because we know the difference from our earlier accounting knowledge that bad debts are removed from the ledgers as well as the balance sheet, but the allowances are only removed directly from the statement of financial position because they are doubtful, slow moving. We are not sure regarding them that they will not be received, so there is a doubt. That is why we do not remove them from the ledgers. We keep in the ledgers to trace them, but those receivable balances are directly removed from the statement of financial position. This is based on our earlier accounting knowledge. And I'm telling you again and again, if you want to make sure that you are a good auditor, then you should have a grip on the accounting. Now, I have written the procedure regarding the bad debts. I have also written the procedure regarding slow moving and doubtful receivables. Now for disputed receivables, review the board minutes, because if there are some disputed receivables, there will be the discussion in the board minutes. Review the board minutes of dashing company to see whether there is any discussion on disputed receivables and what action has been taken against that. Okay, the next procedure in which we're going to confirm if there are any recoveries post year end. For example, by year end, they have recorded, year end is 31st December, for example. And by year end, they have recorded that they have to receive $100 from Mr. ABC. And there is a receipt from Mr. ABC on 10th of January where he has paid $90 as a full settlement. Now, if there is a receipt post year end which is below than what they have recorded, and that is a full settlement, then that means receivable should have been recorded at year end at 90 rather than $100. So what you're going to do, review the post year end cash receipts and compare with the year end receivable balance. So these are the procedures which are related to the valuation. So in all of these procedures, we aimed to confirm whether the receivable have been recorded at the correct value. All right, so now we'll be talking about the procedures which is going to confirm the completeness assertion. Now again, before making the procedure, let's brainstorm few things, and then we'll be able to make correct procedures. Now the completeness means that the receivable balance have been recorded everywhere where it should have been recorded, and it is the same balance recorded everywhere. Now we need to make sure that we know where these receivable balances are usually recorded. So we know there are individual ledgers, then we know there are list of balances, there are recorded in the trial balance, like when we close the ledgers, the balances go in the trial balance. Then we know there is a control account, which is also known as general ledger or nominal ledger, and the name is receivable ledger control account. And then we have finally the balance in the statement of financial position. So this is the completeness thing. Like the same balance, like when you talk about individual ledgers, the total of the individual ledgers should be equal to the control account. This is the first thing. The balances which are recorded in the individual ledger should be the same which are recorded in the list of balances. The same figure from the trial balance goes to the statement of financial position, and also these balances should be the same. So this is how we record the receivables. And now we need to confirm the completeness. Now we'll be writing the same concept in the form of the procedures. We also know that receivables are generated through sales. And when we do sales, there is a goods dispatch note. Now, when we have dispatched the goods, at the same time, we record the sales as well as the receivables. You know, the double entry, debit receivables, credit sales. So when the goods are dispatched, sale is recorded and a corresponding receivable is recorded. Then we have the sales invoices, and the sales invoices are produced once the goods have been dispatched. And the sales invoice represent the same thing which have been sent to the customers. That means the goods you have sent to the customers, which are present in the goods dispatch note, the invoice will be produced from the goods dispatch note. And then when the sales invoice have been produced, this balance which is receivable should be recorded in the ledger and then in all those documents. So how we can write the procedure: select a sample of goods dispatch notes select a sample of goods dispatch notes. This is known as the GDN. Agree or compare to the sales invoices, because I've told you when the goods once the goods have been dispatched, we prepare the sales invoices. and then recording in the ledgers. So this is the first procedure in which we have confirmed that once the sale has been made, there should be a GDN, and from the GDN, the sales invoice should be produced, and that sales invoice should be recorded in the ledger. That means you have recorded the sale as well as the corresponding receivable. Obtain the list of balances. This thing, obtain the list of balances in which there are all the receivables which have been recorded. Obtain the list of balances and agree the figures to the individual ledgers. These figures should be same. Remember, we are confirming the completeness. That same thing is recorded everywhere, and the receivable, it is recorded everywhere where it should have been recorded. Right? Similarly, you can also confirm the balance in the trial balance with that of the statement of financial position. The balance in the receivable ledger control account with that of the statement of financial position. And now we'll be moving towards the last thing, which is rights and obligations. Rights and obligation. Now here we are going to confirm that the receivable which is recorded by the management is owned by them. They own that balance. Now how we can confirm this? First of all, you need to see the invoice. Now, if there is a receivable balance, for example, this amount, there should be an invoice related to that receivable. And that invoice should be named on the name of that customer. This is the first thing you need to remember. The second thing is that if the company has done factoring, that means some third party is receiving the receivables on behalf of them, then there should be a discussion in the board meeting regarding those factoring, and there should be a list of that receivables which have been factored to the third party. Sometimes we keep receivables as a collaterals. That means a security against which we take the loans. And we cannot write the receivable circularization thing over here because the examiner has specifically said that you are not supposed to write again the receivable circularization. Otherwise, we can write that we can confirm from those receivables whether they owe this amount to the company. Even that receivable circularization thing confirms the rights and obligations. All right, so first of all, there should be a sale invoice. So how are we going to confirm this? For the sample of receivables, for a sample of receivables, for a sample of receivables, agree the balance recorded in the ledger with the balance on the sales invoice also confirm that the name on the ledger is same as on the sales invoice. Because when you maintain a ledger, for example, an individual ledger, this ledger has a name, for example, Mr. XYZ, and then there is an invoice sent to XYZ. These should be the same. Rights and obligations. Discuss or inquire from the finance director whether any receivables have been factored. Obtain the list of factored receivables and agree to the customer ledger. So this is how you are going to write the procedures for rights and obligation. You may write some of the procedures as well. I have explained all these procedures in your notes as well. So there were 6 marks. That means you have to write 2 procedures for accuracy, 2 procedures for completeness, and 2 procedures for the rights and obligations. All right, so you can see that we are able to make the procedures for accuracy, we are able to make the procedure for completeness, and then we made the procedure for the rights and obligation. Now we are coming toward the C part, which says describe substantive procedures the auditor should perform to confirm the redundancy provision. And that means 5 marks, 5 procedures. So we have the case study over here. It has something regarding the redundancies. Dashing company manufactures women clothing. Its year end was 31st July. You are an audit supervisor of John T and Company, and at the year end, Dashing company is due to commence shortly. The draft financial statement recognized profit before tax of 2.6 million and total assets of 18 million. Basically, you have a D part as well, which is related to audit report. For that, they have given you the benchmarks, but we are not going to do that D part right now, which is a material balance as part of the audit approach. A positive receivable circularization is to be undertaken. Now we have this thing. At the planning meeting, the finance director of Dashing Company informed the audit engagement partner that the company was closing one of its smaller production sites, and as a result, a number of employees would be made redundant. And we know from our F7 knowledge, financial reporting knowledge, that this is restructuring. This is restructuring. When they are closing one of their site, this is actually the restructuring or reorganization. And actually this comes under IAS 37, but there's no need to mention this thing over there in the exam. You can just write standard according to the standard. The redundancy provision of 1,10,000 is included. This is actually the severance payments you have to make to the employees, which you have studied in your law paper, F4 paper, severance payments. Redundancy provision of 1,10,000. Now, first of all, there is a criteria of IAS 37, if you remember from your financial reporting knowledge, that if there is a restructuring, first of all, it should meet a criteria. And what is the criteria? The first thing in the criteria is that there should be a formal plan. Now, formal plan means that this is being discussed at the board meeting. At the board meeting, it has been decided by the board of directors with the permission of the shareholders that they are going to do this. Formal plan. And the second thing is that communicated to the stakeholders. Communicated to the affectees. Here the stakeholder means communicated to the affectees. So there are two criteria, the formal plan and then communicated to the stakeholders. And once the criteria has been met, the provision should be recorded only for the direct amounts, such as redundancy costs, such as lease termination cost, loan repayment cost. But no provision should be recorded for trainings and already committed cost. So this is the criteria, this is a full treatment described by the IAS 37 regarding the restructuring. Now, the first thing we need to confirm is the formal plan. How are you going to confirm it? Review the board minutes. To confirm there is a firm and a formal plan to make employees redundant and paying them redundancy, making them redundancy payments or severance payments. So the first thing is you need to confirm whether there is a formal plan. Now the second thing is you need to confirm whether it is communicated to the affectees. So first of all, you can inquire from the finance director whether the restructuring plan has been communicated to the affectees. Obviously, they're going to say yes. So when they're saying yes, so what you can do is review the evidence of formal announcements made to stakeholders. Sorry. Now further what you're going to do is there should be a provision. So obtain the breakdown of the provision recorded and confirm provision for only direct amounts have been recorded in the financial statements, because there should be no provision for irrelevant or indirect cost. Recalculate the provisions and agree the figure to that of financial statements to confirm valuation and accuracy. There's no need to write to confirm valuation and accuracy. Thus, I have written it to complete the procedure, because we already know that when we do recalculation, we are confirming the valuation. Now, similarly, you can write other simple procedures: review the disclosures or notes to the financial statements. To confirm adequate disclosures have been provided, review the disclosures and confirm whether they have been adequately provided according to IS 37, or you can write according to relevant standard. You can also write obtain the written representation from the management to ensure only provision for direct amounts have been recorded. So this is how you are going to make the procedures for the redundancies. So we have done a full question in which A part was related to the receivable circularization. These are again the audit procedures. B part was again the audit procedures related to receivables year-end balance. And the C part was related to the substantive procedures of redundancy provision.